Hello, this is Michael J. I'm in Nashville today at a huge seminar, meeting up with several other real deal real estate investors from across the country. And every time we get together, we're always asking each other, what's going on with business, what's working, what's not working, what new marketing are you doing? Um, what we all kind of realized is, there's never one thing that works all the time. We're in a different market right now. None of us have invented any strategies. There's nothing new. And I'm not doing anything new. I haven't invented anything in this business. I'm just employing the right, in my opinion, the right strategy at the right time in the right market. And when other investors are asking me what I'm doing in this declining market, honestly, they're all going gonzo when I'm telling them what I've been doing here. So I wanted to share some of that with you today. First, let's consider, I guess, the last few years in real estate, over the last 5 years or so, who was really making the money? The builders, the rehabbers, the lenders were all making a killing. And silently, a lot of us out there that were managing a lot of property were just kind of sitting there, sucking it up, eating up the lousy rents, but not selling off a lot of this equity that we've acquired. So now that we're in a lousy buy-sell market, money's harder to get, buyers are harder to finance, builders are going bankrupt, buy-sell guys are out of the business, getting jobs, and lenders are dropping like flies. So in this market, who's making the money? Okay? Values are continuing to slide. Well, you guessed it, it's the managers. Now, I don't really want to go out there and just be a property manager managing other people's property for a couple of bucks a month. That's not what I'm about. I'm an investor and I like the equity side of this business too. But, what I decided is I want to go about and pick out the benefits that I do want, but really kind of eliminate the ones I don't want. So I'm a pretty conservative guy. So I asked myself, how can I take the benefits that I do want, but not the ones I don't want in this declining market? So I mean, I like equity. I like equity a lot, actually. And I like the cash flow. I like down payments from tenant buyers, but I really don't like vacancy costs. I don't like maintenance costs. And I certainly don't like the risk of declining values in the market we've got. So I basically put together a completely new way I'm doing things to eliminate all my risk, all my vacancy expenses. Basically, I'm skyrocketing my monthly cash flow, all from fewer houses, meaning I'm making far more cash flow on far fewer deals, and I'm protecting a back end equity or a profit spread between my buy price and my sell price. So here's what everyone's asking me, and this is why I'm doing a video, so I don't have to keep saying the same thing over and over. So that's the magic question. How am I doing it? Okay, well, the marketing list is still the same. Okay, I'm usually looking for killer subject to deals, gorgeous median price house properties. However, in this case, there's really no limit on the low side or the high side in values. Okay, and if it's all the same, I prefer the nicer houses, nicer areas. Typically, the higher values is always going to be a higher profit spread. The houses are nicer; they kind of sell themselves. You deal with a better quality tenant, so it's a lot more hassle-free to deal with. So I market to the same list, and I'm making what I call a performance-based lease purchase. Okay, like an agreement with a normal property manager. If the house is vacant, the owner covers the payments and the utility expenses while the manager finds a suitable tenant. If the rents don't cover debt service, who eats the negative cash flow? The owner. Okay, I offer them the same thing, which is basically you take the risk. If it's not rented, or if it is rented, I'll send you some of the money, but I'm going to keep 10%. Now, normal property managers keep 10% of the collected rents, pretty standard. But here's where the investor in me comes into play. I want to negotiate a better spread than that. So first, we start with a below market price, okay, a buy price. So usually I'm knocking these down about 12 to 15%. Far from a home run, but a good chunk of equity. In my market, we're about a $215,000 median price. So that's a little over $30,000 at a 15% spread. So averaging retail comps to backing out normal buy-sell expenses in this market is pretty easy to knock that right off the top and not seem like I'm trying to nickel and dime them or beat them up too bad on the price. Okay, well, I play the same game on the rents. Now, by averaging the rents in the area, by averaging, I instead of starting at the high end, I start more in the middle, and then I take money off of that. So I create a bigger spread. So I take my 10%, but I negotiate a hard number. Okay. Now, what I actually collect is something totally different. Okay. So now I'm going and I'm marketing this property on more or less I'm creating a performance-based sandwich lease option. So I'm not moving into them. I have the ability to sublet them or sublease them. So I've got the right to buy it. I've got a built-in equity spread. I've got the rent to sublet it. So, and I've negotiated a below-market rent payment. So now I go negotiate an above-market rent payment, and I offer it on the same terms. I offer it to a tenant buyer who wants to move in, can't get financed right now, has a little bit of a down payment. Um, Typically, I'm getting 5 to 10% above market rent. Okay, so more or less, if I find a tenant buyer, I put cash in my pocket from their down payment. If the house is empty, I don't cover it. If the utilities are on, I'm not paying for it. If it needs cleaned up, if something breaks, I'm not paying for it. Now, I do pass on all the minor maintenance to my to the tenant buyer. If anything goes over that amount, I pass that on to the homeowner. So I have absolutely no risk there. So I'm getting chunks of cash on the front end, chunks of cash on the back end. I've got no fix-up, no headaches, no lenders killing the deal at the last minute, and I'm locking in a large profit in a declining market. So let me leave you with one example so you can see what some numbers are. And this is actually a little bit below median value in my market. House values are 170 to 189. Payment on this particular house was $1,200, and it sat out there for 10 months on the MLS. Didn't sell, and frankly, the only reason it didn't sell was just dirty. It had been a rental property. They'd just never gone around, hadn't cleaned the baseboards, hadn't cleaned the kitchen real thoroughly. So I negotiated a purchase price of $156,900 a month payment. And then we had our cleaning cow go in there, clean up the house, and I passed the bill on to the seller. Within 2 weeks, I had a tenant buyer, not the greatest down payment, but we got them quick. They had $2,000 in first month's rent, and they were willing to pay the $2,000 down, $1,295 a month, and a purchase price of $189,900. So basically, I got a $33,000 plus profit spread. I got $395 a month in cash flow, and I've got up to 6 years to sell this deal. Now, I'm anxious to get the back end profit as quick as possible, but if this goes 6 years, I'm not going to be too terribly upset at nearly $400 a month in positive cash flow. If my buyer doesn't buy, though, if the owner has, basically, if I get the house back, first buyer doesn't buy it, one, I've got up to 6 years to do this all over again. When it's vacant, I don't cover the expenses, I don't cover the utilities. I'll coordinate getting it cleaned up, but I don't have to do it. I don't have to cover the expenses. I pass that on to the owner. Okay, so basically, these deals are easy to find. There's tons of houses out there for sale. There's no end in sight. In some cases, how long it's going to take them to get the house moved. So, any seller who needs to sell, I'm getting amazing amounts of positive results. People love the idea. It offsets some of their risk. They get to write off the negative cash flow, and for the typical earned income person, that's just another write-off they've got. So, anyway, churning these things out, exploding our monthly cash flow, eliminating a lot of the risk. I'm dealing in excellent properties, easy to sell, gorgeous stuff you'd be proud to show friends and family that this is the kind of properties that you manage, and making big, $20,000, $30,000, or in this case even more paydays on houses with no risk. You just can't get any better than that. So there you go. Take that, go out, buy a house, make some money.